So interest rates got kept on hold yesterday. Absolutely great news for everyone. But what does it mean when the Reserve Bank governor says this?
Very rapid rise in interest rates over the last 18 months to 2 years. And it's been rapid because, first of all, we had to remove all of that stimulus that we had from the pandemic. And then we had to obviously address inflation, which means we had to get interest rates into restrictive territory. That said, the inflation rate still has a 4 in front of it.
Well, ultimately, the inflation target for the Reserve Bank is 2 to 3%, which means it is still well above what the target is at the moment, being 4.1%. It's a target that they want to get down because they want inflation to be in the background. They don't want it affecting the economy. They don't want people worrying about it. It shouldn't be raising the cost of living and causing households pain like it is at the moment still. So the Reserve Bank is using the only stick, what I like to call the big wooden spoon, they're kind of holding it ready to spank us on the bum if they need to. And if they don't, they're ready to put it back in the drawer. So we're on that kind of cusp where you're threatening, but you're not threatening, and you want to pack it up, but you don't want to pack it up. And that's kind of the situation that they've got with interest rates at the moment. If everyone starts spending because they get confidence in the marketplace and think, oh, interest rates are on hold, it's time to spend some money, everything's going to be okay, and inflation starts increasing again, they may have to get out their stick and whack us with it. So from that aspect, they're proceeding with caution. They're putting them on hold. They're saying some comments like, we may need to put them up, we may need to put them on hold, we may need to be able to bring them down, but they're being very cautious with where we're at the moment because they're not sure that they're out of the woods when it comes to inflation. Now, what we can do as Australians, if we keep our spending in check, that should keep interest rates in check, and then everything should motor along nice and cruisy and return to somewhat of a normal after the pandemic. So it's good signs at this stage, but we'll see what happens in the next couple of interest rate meetings and go from there.